We saw the market starting to recognize that, he backed off once the bond market forced him to back off on his general tariffs, except for China, and then also on these Chinese tariffs. And so the Trump put is back on. And my thesis is this, is that the markets can keep grinding higher as long as the economy holds up, right? So whether there's a trade spat or an Elon Musk Trump feud or any of these other things, as long as the economy is holding up well enough, the markets can grind higher. But if that economy goes, that's where things are going to get messy for the markets.
Well, do you think the economy is holding up well right now?
I think the headline numbers, right? So this is the crazy thing about it, right? So we saw this jobs number on Friday, 137,000. Okay, so 137,000, but let's not forget the last 2 months were revised down by 90,000. So let's just say we revise this one down 50,000. Is that a good number? No, it's a mediocre number. And then you look at participation rate, which is coming down. You look at the overall levels of the U6 unemployment, which are creeping up. So there's no doubt that the inventory again. And so what they're doing is they're buying the inventory essentially pre-tariff, and that enables them to keep prices relatively stable. And that's why I think we haven't seen the inflation. But if the tariffs do ultimately end up sticking, then I do think that the inflation will start to show up. The other thing to keep in mind is that while we're seeing inflation in certain things, we're also seeing oil and energy prices go down. And that's really anchoring and pulling down the overall inflation number, right? So oil again trading back in the low to mid 60s. And that again is historically, at least over the last 5 to 10 years, relatively low. And that's keeping pressure on inflation.
So how do you think the market is responding to all this? In fact, what is it responding to? Like I alluded to earlier in the introduction, the S&P is up to 6,000 points now. It's nearing new all-time highs. Gareth, why this bullish sentiment?
Yeah, so I think the key here is that we've had these investors and retail, and even to some extent now, these second grade hedge funds that have really been saying, oh my goodness, I've got to pile in this market. And so I think the retail and that same trend line connected to the high of the .com era, we just tagged it here. We pulled back. We obviously had a 20%, nearly 20% drop. Now we're pushing back up. So could the markets hit a new all-time high? Absolutely, they could. But this trend line, I have to respect it and understand that every time we've hit it, we've had a major pullback, whether it was the Great Depression, the .com collapse, or even this recent drop of 20%. And so again, if the S&P goes up to, let's say, 62 and a quarter to 6,250, I would think that at that point, the markets will see a drawdown. And let's be clear here, folks. The economy is slowing. Yes, the headline labor numbers, okay, sure. Whether you believe it or not, or whether you think that they're going to be revised down or not, we are seeing a slowdown in the global economy and the domestic economy. And at some point, these valuations of these stocks, which are historically very, very expensive, will have to come back to earth. And the charts here are telling us, sure.
Plans today, join Delete Me and take back control of your privacy now.
Gareth, at what point do you think that the S&P is going to start reversing? Obviously, we don't know the top, we don't know the bottom, but at what level would you start looking at it and say, this is getting way too frothy?
Yeah, so I think we're getting close to that. We're seeing today the semiconductors, and I want to show you actually this chart in a second, but the semiconductors are nearing a major resistance level. I also think there's a tendency to always get the maximum amount of bulls on board before the rug essentially gets pulled underneath the retail investor. And so when you look at the S&P, right, and we go back to our regular chart here and we look at where we are now only approximately, let's see here, we are about 2.3%. You can use the trend lines of a channel to trade very accurately, i.e. the low of COVID all the way to the high of the bull market, back to the low of the bear market, then gave us our exact 2024 market high. We then had this collapse. Now we're pushing back up. So if the NASDAQ gets to about 21,000 or 20,900, we'll slam into that level again. And my guess is then you'll see that next big fall.
Can you just maybe pull up a NASDAQ chart and show us maybe a Fibonacci extension or maybe some moving averages and just maybe illustrate to us how overstretched it may be?
Yeah, so here's,
you see, I'm starting to learn the technicals.
I know, I love it. I love it. This is awesome stuff. So here we have on the chart of the NASDAQ.
By the way, you're still showing the semiconductor chart. Can you
Oh, I apologize here. Bear with me. A little bit more upside in the markets. But even if we go to that upper band of the parallel, that's only 6.7% higher. So again, the upside is very, very limited to me in this market versus the downside. I still think that at some point, the bottom is going to fall out of this market and we will see a major drop. And again, just flipping back to the SMH short term, I want to show you this. Take a look at this chart. So there's a trend line here. And can you see the SMH chart there, David?
Yeah.
Okay.
Got it.
So you have your all-time high on the semis right here, and you connect it to this high, and you have a gap fill right here. Notice these two lines are right in this zone, and look at what the SMH just kissed today, the lower band of that trend line. So huge resistance on the semis here. Remember, there's a baseline tariff for everyone at minimum of 10%. And even with this kind of truce with China, it's still 30. I believe it's 30%, if not 40%, that the US has still imposed. So there is going to be tariffs, and there will be as long as Trump is president. The question is at what level? In addition, what about government spending? Right. So we've already seen Doge do their cuts. Now, granted, this big, beautiful bill doesn't really do much, but there are going to be cuts in that bill. In the very least, the spending won't be as maximized as what we've seen prior in previous bills from the government. The deficit essentially probably rises a little bit less, or the debt rises a little bit less than it has been, albeit probably still going higher. So there's this issue now where the government is being much more aware of spending, where they're not just going to flood the market with liquidity. And the Fed is very clearly not quite as aggressively cut for a job, and I just can't find one. So I'm going to take myself out of the potential workforce. That is a bearish sign for the labor market as well. So the cracks are there. You just have not seen the glass shatter yet. And that's what I think will be the trigger towards this market decline.
Okay. How do you think the Fed will respond to this glass shattering?
Yeah, so I think, and this is going to be really interesting. So as long as we don't see this uptick on inflation, the Fed will eventually start to be aggressive, thinking that they're behind the curve in terms of cutting. I think right now they're pricing in 2 rate cuts the remainder of the year. I wouldn't be surprised if we have 3 by year end, but I still think overall they will cut as long as the tariffs don't trigger an uptick in inflation. And I think that's the one wild card that a lot of investors are now saying, oh, don't worry, the Fed can cut rates so we can continue to buy the market. Well, again, let's keep an eye on those inflation numbers, which, remember, the inventories.
You just look at it from a multi-month horizon. They do look very much correlated to each other. So do you have the same analysis for Bitcoin as you did for the NASDAQ?
Yeah, I do. In fact, almost identical. And you're right. You know, there are periods with Bitcoin where it diverges slightly. And for instance, when there was this fear in early April that the treasuries were not demanded by other countries, countries were fighting back saying, hey, we're not going to buy US debt. We saw that uptick in yields. The market obviously panicked, but Bitcoin started to see some interest there. Same thing with the dollar, where the dollar has historically been the safe haven asset. But for short periods, people were like, wait a minute, maybe the dollar's not the best safe haven. Maybe we should buy some Bitcoin. But aside from those rare instances, the market has led Bitcoin up and down. And we could see that very clearly. Like last week when Elon Musk and Trump were having their feud and the stock market sold off, we saw Bitcoin selling off. Then as the stock market has...
So in other words, what are the levels for the floor and the ceiling?
Yeah, so ceiling is going to be, you know, at least based on this chart, around 115. So you got a ceiling of around 115. And then you would be basically, for me at least as a technician, if we ever get back to this lower band of the parallel, that would be where I would be a buyer, which is down around 55 to 60,000. And obviously people will freak out when I say that. But remember, historically, Bitcoin pulling back, I mean, this would be about a 50% pullback. It's actually not that unusual to see that type of pullback. In addition, if we look at the chart here, look at this. That level coexists right with this area of support that Bitcoin was at just back in July of 2024, basically 1 year ago. And so it would be a good retrace hitting 2 major supports. And then you would have to think that Bitcoin would be a buy. And I just want to be clear, I'm a shorter term investor and trader. I'm a big fan of Bitcoin over the longer term. But again, you know, being a chartist, I have to let the charts tell me where resistance is and where support is.
If you just look at the chart that you have on the screen here, mid 2024, Bitcoin had a bit of a pullback. Were you surprised that the pullback was not as big as it could have been.
That level is there, meaning the 115 level. I respect it until proven otherwise.
So you say you're long-term bullish on Bitcoin. Somebody listening to our conversation right now might think, well, you're saying it's almost at a resistance point, but you're still long-term bullish. It has the ability or the potential to retrace 50%, which is not unusual for Bitcoin. I mean, what should I do at this point? Do I stay long and ride out the waves, or do I start shorting?
Yeah, so I think the first question everyone has to ask themselves is, what's their time horizon? If your time horizon is you're a short-term investor, I would be in cash or short Bitcoin. I'm short Bitcoin myself right now, with a stop just above that 115 level. If you're a longer-term investor, who cares, right? I mean, if your outlook is 20 years, just basically dollar cost average. If it comes down to 80, buy a little 70, 60, 50, etc. And I think that's the key. So time frame here does matter in terms of how you are as an investor. Shorter-term investors need to be aware of the down move. Longer term investors, this is just another blip on the screen in a
like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.